very first investment I made on July 1st, 99, when my fund started. And it was a company called Silicon Valley Bank. And Silicon Valley Bank at this point might have a branch in Singapore. I'm not sure. They've expanded a lot. So at that time in July 99, one of my concerns was that valuations were getting pretty crazy. I mean, I didn't know it at the time, but we were about 8 or 9 months away from a massive implosion in the NASDAQ, the collapse of that dot-com bubble. But I knew that we were in a bubble. I had myself had a private .com. And so I was able to see things which had already blown up. And so I could see things about maybe 4 or 5 months ahead of what others could see. So I knew that, I mean, I recognized, because I was a tech guy, that the internet was transformational. But I also recognized that the valuations that we had in a bunch of these pets.com and whatever else was ridiculous. But I was trying to find a way to play that arena where I have upside without downside. And I found a way to play that with Silicon Valley Bank. So Silicon Valley Bank is actually what I would have done really well on is if I just held it from then till now. I actually held it for just about a year. I more than doubled or tripled my money and I moved on. But it's compounded at like 20% a year for like 20 years so far. It's done really well. It's a very unusual bank. It's headquartered in Silicon Valley, and their clients are mainly venture-backed tech companies. Their main clients actually are the top flight venture capitalists. So if you're Sequoia or Anderson Horowitz or Greylock, whoever, when you fund a company and you're the first venture capital going in, you're probably going to tell the company to open an account at Silicon Valley Bank. The reason you're going to tell them to open at Silicon Valley Bank, because Silicon Valley Bank has got a lot of expertise in dealing with tech companies. So the VCs know that they can get reporting from them, which is better than they can get from other places, because they understand what the venture capitalists are looking for. The VCs in their term sheets would say, you need to send us these reports, show us the balances, whatever else. And they've got great reporting to them. The other thing they've got is that because it's almost like the captive lenders. So when a company gets venture capital, they don't want to spend that money buying servers and furniture and so on. Those things they would rather finance, right? So the money they raise goes further. And Silicon Valley Bank is really good at financing those things. So if a company is looking to buy $250,000 worth of servers, for example, computer equipment, they'll make that loan. And again, for them, it looks like a captive, because if the company goes under and they get title to those servers, they are financing those every 3 days with some other. So they could go to some new startup and say, listen, I can give you all the servers at half off, 70% off. And they're brand new. Come and take a look at them. A lot of people will take them up on that. So they have a way to recycle that asset in a way that most other lenders would not have, because they're so homogeneous or some company that goes under just bought a software license, and that license is valuable and they can, again, recycle that license and so on. So their business is really good. But the other thing that what they were doing is in Silicon Valley, when you go to a restaurant, like Il Forneo or whatever, and the waiter serves you, even the waiter gets stock options. The masseuses at Google got stock options. So everyone gets stock options. And so what Silicon Valley Bank did is whenever they made loans to these companies, they collected warrants from them on the side. So they made the loan and said, you also have to give us warrants. And so they would collect these warrants. And they had hundreds and hundreds of these companies, which were their clients. And they had a huge amount of warrants, but there was no disclosure on how many warrants, which companies, whatever. But I knew that they were sitting on this huge stockpile of warrants, and these companies were going public. At that time, the bubble hadn't burst. So I was only paying 10 times earnings for the business, because no one was interested in these regular companies. Everyone wanted sexy businesses and all that. In a few months after I invested, they started announcing that we monetized 8 of these and we made so much money, and they was dwarfing their earnings. So the amount they were making on those, so they started gradually as these companies started going public, they started going into looking through their treasury and saying, okay, what do we have? And they started unloading those. And then the stock started reacting to that, because they had this huge thing. And eventually we tripled our money, and it was like the bubble burst. But I think by June or August of 2000, which was just a little over a year or 14 months after I made the investment, we were out, and I think we made a 3x on it. So that worked out pretty good. And so that was a case where, you had this unknown basket, but I'm not paying anything for it, right? I didn't know what was in the basket, but it was low risk, high uncertainty, right? We weren't paying for it. And so if the basket was utterly useless, I still have a well-run bank. And now they've expanded all over the place, but they've kept to their knitting. They only deal with venture-backed companies. And I think they have a very great niche in banking, and that's why they've done so well over all these years. So that gives you some sense of kind of 4 different investments, which is somewhat different from each other in different times. And what I'm looking for is, I have no interest in some business that's trading at $10 and it's worth 13 or 15 or 17. That's not of interest. What I'm looking for is a wide mispricing. We don't necessarily need an information edge. We usually don't have an information edge, but we can easily have an analytics edge. So in these situations, I had no information edge on Silicon Valley Bank. I don't know what's in that basket, but I can analyze it from a high level and say, I can't lose. I know that it's uncertain, but I can't lose, so it's okay, I can go in there.